Good morning, everybody. Good afternoon to my friends across the pond. This is the Ticker Highlight Show. I am Mark Sebastian. I am your only option. I am joined via the state of Florida, I believe. Alicia J. Leslie, are you in Florida?
Yeah.
The Queen of the Candles.
Yep.
The Queen of the Candles.
We drove
And,
across, though. We're on the East Coast now.
Yes. And coming to us from South Carolina, the Viking of Volatility, Andrew T. Giovinazzi. Yeah, I guess.
I'm still quite a bit delayed.
It's good to see everybody. So the Ticker Highlight Show, every week we pull up a ticker, which is another name for a stock, and we break it down for you from a fundamental long-term basis, kind of my view. And then we look at the charts with Alicia, and then Andrew breaks down a little bit of volatility on it. And then we talk about a trade. But before we do that, let's circle up and look at what happened last week with TLT, because I was out last week. I was in where was I? Canada? I wasn't. Was I here?
Yeah, you're in Canada.
No, I was in Canada.
Yeah.
Oh, no, we had option pit people here, so Alicia handled everything. But we had a really nice trade in the previous week. I was in Canada. We had a banger in TLT. Andrew, we lost your camera.
Yeah, because it's so delayed. The camera is so delayed, Mark. I don't know why, but it is.
All right. Well, there you go. Thank you, Sebastian fan. We had a bit of a banger in TLT. Andrew, why don't you give us just a quick breakdown of what happened in TLT?
We bought a strangle, I believe, and we bought the 99.5 October 18 strangle, and we were closing the puts on Friday, I believe.
Yeah, nice trade.
It worked out pretty good.
Yeah, I mean the 98.5 puts are worth $3.60. That's a nice trade.
Oh yeah, I think we closed them for $2. We didn't get that good. Well, I don't know. What do we get? $270. I think we were into the whole thing for $190, and we sold the puts for $270. So
it's a 50% gain. That's
kind
not
of
too bad.
No, not at all. So about like 50% maybe.
Yeah, for a free trade, that's a banger. So way to go. All right. So this week we are looking at Cleveland Cliffs, and what makes this one interesting is that it is very much kind of a regulatory play, and it has just been so bad. On the 1 month doesn't look so terrible, right? It's up 10%. Even the 3 month, down a little bit. But, you go on a 1 year chart or a 2 year chart, and this thing is just, April of 24, it's $23. It's been half in about 6 months. And, you ask yourself why, because, you look at the numbers and they don't look that bad. They don't make a lot of money relative to their per share, but they do make money. The issue is they've got really good EBITDA. So their earnings before interest, dividends, and taxes is $1.46 billion. That is really good considering a $6 billion market cap. So what does that tell everybody the issue is here? If we've got an EBITDA of $1.46 billion and yet the PE is 164. Where is the issue? And the answer is debt. This company is carrying a debt load. And that's why I thought it was interesting that they were trying to buy U.S. Steel. Now, at the time, U.S. Steel was worth less than them, but now U.S. Steel is currently worth about 33% more than CLF. I don't understand how that merger works if the Nippon deal falls apart. I just don't. Merger of equals, it doesn't make a lot of sense. The numbers on U.S. Steel, it's a much more secure company. They don't have the debt issues. Just across the board, U.S. Steel is a better company than Cleveland Cliffs from a fundamental basis. And so, similar EBITDA, but look at the net income, $570 million versus CLF, which had a net income of $44 million on actually a higher EBITDA. So they've got a lot of debt, and that is what kind of holds them down. So interest rates starting to kind of roll over, and if the Fed is going to start dropping rates, CLF falls into one of those names that will be a beneficiary. And if the economy is not going to crater, again, CLF will be a winner. It's bottomed out, coming down. It got as low as almost $10, has gotten to almost 13, and is now just kind of hanging around the 50-day moving average. We've seen a lot of interest in this one in terms of option flow. If you go out to January of 2025, you can see there's some interest at the 15s and 16s. You go out a little further dated and look at June, the 13s, the 15s, a lot of 20s, but I think that's older paper. You've got some paper interested in December of 2025, the 10s, the 13s. And if I go all the way out to the leaps, you can see, again, lots of long dated paper. There is some long-term interest in this one relative to kind of the total open interest in the stock. So it's an interesting one from an option fingerprints take as well, Andrew. So that's kind of my long-term view on this one. I think it's at an interesting spot. If interest is going to start rolling over and rates are going to be coming down, CLF is a really interesting long because that'll really put a relief on their debt load. I think the best thing for them is to not get this U.S. Steel deal. And, I think the stock definitely has potential to move higher. So let me hand things off to the Queen. And let's take a look at where it is on the candles and the pitchforks.
So Cleveland has done nothing but go straight down since April. And it followed along my pitchfork pretty well, holding the bottom down here with a nice hammer, gotten the rally off the hammer. Now we're consolidating though. And my resistance is right where our consolidation is. And that lines up with the point of control. On Thinkorswim, that red line is the point of control. And the 50-day. So we have a bunch of just resistance, consolidation. We need to break away from this area, either higher or lower, to take a position. I would say take a direction. We want to see. I mean, it's been doing this since how many days now? September 26th. I would recommend waiting for it to trade out of the box range before going higher or lower. Probably higher, I would say. 1431. And then up here, your previous highs, 16 and a quarter. Support is down here, 11.19. But looking at this, I would say looks like it wants to make the V bottom and continue higher. This can consolidate though. I recommend waiting for it to break out of that to consolidation.
There is really heavy call open interest in regular October here, which I think is kind of interesting for a near dated move. And interestingly, November, not as much. They're long a lot of the 16 calls, which is a weird strike to be long.
In October?
In November, in October, they are long they own the 13 calls.
Okay.
About 13,000 times. I believe they own the 13-15 call spread. There's a little bit of open interest on the 14 calls as well.
I agree. It totally looks geared, ready to take that leg higher, but it can consolidate. You know how it goes.
All right.
I hand it over to you, Andrew.
With our volatility check, let's pass it off to the Viking of volatility, the mysterious face behind the curtain, if you will. Andrew T. Giovinazzi.
I am all right. Hold on, I'm working on it. Oh my gosh, I can't believe how much time I spent on this week. It's still crazy. All right. All righty, we're gonna do that. How is everybody doing? Everybody should be able to see my screen.
Yeah, we can see it. We can see it.
All right. Well, that's good. So Mark pointed out here we have a little open interest. The first thing I would say, just on a peripheral, like, why is VIX going up so much? That's a little crazy. That's not totally for today, but all right, let's see here. Can we get some? I might have to change some of this stuff, some of these colors. I don't like that color very much. Let me do something here. All right, there we go. All right. So I just want you to take a look here. So earnings mid-July. So we should have August, September, mid-October.
Yeah, they're guessing
so
the 21st
if you're looking at
right
this
now.
chart, huh?
They're guessing the 21st right now.
Okay. Yeah. So, but if you're looking at this chart, like, you can see the whole year, right? Look at the whole year for earnings. Have you seen vol this high, this far out?
Mm-mm.
I would say no. So, in my head, do you really want to buy this kind, volatility this high? The stock's at a lower price, so it traded a little below 11. It's starting to kick up. Again, if we're using some of the Flash 10 methodology, there's a couple of parts here that look interesting from that point of view. I do like to see, the earnings here are spotty, so you don't have that earnings turnaround story yet, at least not yet, from what I can see. But you have higher vol. So I would go like put calendar. I don't think the stock's going anywhere, but as Mark said, like that heavy debt load tends to weigh on it a little more. So from that point of view, from a trade, I would look at more like a calendar, like a straight calendar setup here. So I don't
know if I want to own that vol, Andrew.
Huh?
I don't know if I want to own that vol.
You could do a diagonal calendar for a credit.
Yeah.
Like that's kind of what I would think, or like a 1x2 or something like that, where I wouldn't want to spend money on the vol. I would look at the calendar style, the diagonal calendar for a credit. That's what I would do. Or maybe upside call spread, something that would have
I think
a
a
relatively,
call spread makes a lot of sense. I think in lieu of like when vol's kind of elevated and you want to stay simple and you think a stock is going up, a call spread is very simple and easy because it really does offset a lot of the change in volatility. And you don't face So, buying a call vertical, if volatility does relax, that should offset a lot of the vol collapse as we rally. And it is generally the best approach if you're bullish and we've got this high vol and you don't want to do multi-month ultra complex trades,
Well,
as
yeah,
opposed
because
to
I'm
just
pulling
straight
this up
call.
here. Like, yeah, end of the year mark, you get 13.16 as a buck, 13.17 as $1.
Yeah.
So that's what, 4 to 1?
Yeah. I mean,
In for $1, potentially out for 4.
yeah.
You get to sell that upside. So right now, election is going to make things do this, right? Of course, I'm talking to the camera, but I'm waving my hands. So again, look at some of Leisha's levels that could help us. But a trade like this, I'd start like call spread for not much money. And then if the stock pulled back, I would think about selling a put or put spread against it for some, to generate kind of a flat theta profile. But I don't really sell the put unless, when the sky was kind of falling.
Yeah. I think
if I pulled my
I think you
screen
want
up
to sell the
here,
put if we're down another buck from here, back in the 11th.
yeah, something
But
like
I really like that
so
trade.
our trade would be simple.
I like that trade for a couple of reasons. One, we're seeing those option fingerprints. Two, now Leisha's not fully convinced, but we do have a lot of support here, right? And she did say, I think up rather than down. So I'm gonna run with that. All right.
That's good.
I'll run with that. Two, again, we've got these option fingerprints. Three, rates are moving down, not up. That's going to help with the debt load issues. Four, I think eventually that steel deal does get done. That's bullish CLF as well. And four, I think if you read about what some of the stimulus in China, that's a really bullish steel. Steel prices in China are exploding. And that is going to be, I think, beneficial for U.S. steel prices as well. So I think there's a lot of reasons to like CLF. And then four, buying December, we get that free look at earnings in October. Now, obviously, I don't think our goal is to hold this through October 21st. But buying December, if we get a nice pop between now and earnings, we should not get much of a change in volatility because we're owning a option that is after that earnings announcement. So there's going to be a floor to how much volatility can move on it. So the trade we're looking at would be buying the December 13 calls. Those are about $1.30. And then we would be selling the 17 calls. Those are about 30 cents. And looking for Leisha's target, I believe she said 1431. Is that correct, Leisha?
Yep.
So we're looking for 1431. We get to 1431. This trade's going to be in some pretty darn good shape. It will be worth $1.80. I think we'll be happy campers here. So we would be buying the December 20th, 2024, 13 calls for $1.30 and selling the December 20th, 2024, 17 calls at 30 cents net. We're buying the 1317 call spread or 1317 debit spread, or you might say the December 1317 call vertical. Any of those three work for a total of less than $1. And there you have it, folks.
I like it.
All right. Well, folks, we will update you on how our trade does this week when we're back with you next week. And we're looking forward. Reminder, next week is Columbus Day / Indigenous Peoples Day. the bond market is closed, but the stock market is open. So we will be with you to say hi. And we'll give you an update on how this trade is looking. And we'll be back with you to go through another stock, another ticker, as we're here every Monday at 10:30 a.m. Eastern Time for the Ticker Highlight Show. So for one.
Oh, I got to stop you.
Oh, what do you got?
I need to remind everyone of your special event on Wednesday.
Oh, that's right. Thank you, Alicia. Oh, my. I almost forgot. Yeah, you got to join me and Vaz this Wednesday. There is a you can get the link in the chat, and it's above. It should be pinned to the top of this chat here momentarily to sign up. If you're watching us on YouTube after the fact, please like and subscribe. And if you have a suggestion for a ticker or a question about a ticker that we're covering, please leave us a comment, like, and subscribe. But yes, join me and Vaz this Wednesday. Link in the chat. All right, everybody. Hope you have a thank you, Leisha. Here is you can join us on Wednesday at 2 p.m. Eastern Time. Should be great. Looking forward to seeing everybody. So for Leisha J. Leslie, Queen of the Candles, the Duchess of the Doji, the Premier of the Pitchforks, the Prime Minister of the Pitchforks.
Yeah.
the royalty of resistance, the senior of the seniority of support.
All right.
I don't know.
All righty. Time to go.
And for Andrew T. Giovinazzi, the Vicar of Volatility, the Viking of the VIX, the hardest working man in option trading in all of Maine. I am Mark Sebastian. I am your only option. I hope you have a great day. We'll talk to you guys soon.